Be content to act and leave the talking to others. Baltasar. My friends, every day, 10 to 15 minutes, that is all we ask. That's all that's needed. We want you to practice with us each and every day. Learn this. It is so simple and yet so effective. I'm going to go over that at the end and show you just through the months of April and May with the trades on the Nasdaq 100, S&P 500, gold, and 20-year bonds, just using the STC, getting in 2-to-1 risk to reward ratio based upon the ATR, the average true range, as your risk, doubling that for your reward, up 14.36% in 2 months just on those simple trades. I'll show you. It's on our charts. You can go back and do it yourself and see. Don't trust me. Trust but verify, as President Reagan used to say. I don't remember the Soviet term for that, but that's what it was translated in English. Trust but verify. Again, how do you do this? You practice trade. We're not asking you to put any money in. In fact, we're not a stock calling service. We're an education firm. We don't give market advice. But you can sure see for yourself how well things work. Now let's jump into these charts. It was a beautiful day if you know how to read the charts and you were going short as we were. Of course, the morning started off beautifully, completing, guess what? Down 3.27% on the trade we jumped into back on the 9th. And again, we saw things boom down and knocked us out of the trade in the morning. That is Monday morning, the 13th. Again, beautiful. 2-to-1 risk to reward ratio. We based our loss parameters on our average true range. Set it all up. You just set it and fire it. Of course, those of you who are new might be saying, wait a minute, Tom, how are you making money when the S&P is going down? Well, my friends, there's something called SH, which is the ProShares short, single short. This isn't one of those super leverage shorts. And you can see what it did. Again, gave you a nice clean 3+% climb on there. Just absolutely beautiful. Now, what's going on with the rest of the time frames? Of course, we talked about this, how things were jacking up on the 2-day. And then, of course, what did they do with that plunge over the last 2 days on this 2-day chart? They rocketed over. We can see that, of course, ever since, January, we have been in a negative STC on the weekly chart. And look at that weekly chart as things just rocket down toward the 200 EMA. We go to that. And man, we are in bear territory at that point. Again, things are just holding above a bear market, and it looks like we're plunging our way there. What is to stop it? I don't know. I tell you what has been also going well for us. We're going to leave the S&P 500, go to the Nasdaq 100. Of course, this has been a beautiful trade. We started that on the 10th. I actually jumped into this one myself on PSQ. And of course, things have run down quite beautifully. Again, nothing but an STC crossover right here below the 200 EMA. Jumped in 2-to-1 risk to reward ratio based on the average true range at 14 periods. And boom, I'll show you where I am now. I've been a little greedy. I did not jump out at the top. I've let it run a little longer. I put in a trailing stop. I might pay for that tomorrow if things reverse around. So you can call me an idiot if that happens. However, I've done quite well, up 4.21%. Boom. That is gorgeous. Now, we'll go back to the Nasdaq 100. And again, what I showed you, PSQ, is the single short of the Nasdaq 100. There are other shorts. I wasn't getting greedy and going with QID or QLD, which I believe is the double short. I didn't go for that. I just said, hey, I'll be fine. I'll play it the safe way. And that's okay. Worked out quite well for me. I can't say I've closed that trade yet. But again, we talked about that on Friday. and things are going our way. If indeed you've got a little bit of sophistication and can make money when the market goes up or down in your practice trades. And again, it has been just wonderful. It took a while during this sideways slide and all the impatience in here. I was having a hard time, but we reaped the benefits. Now, as we look at what's going on with the 2-day chart, of course, we can see that it is a plunging well below the 200 EMA. We go to the weekly chart, and of course, look at that, pierce the 200 EMA for the first time in a long time. It touched it all the way back in 2020, March of 2020. Didn't go below it, just touched that 200 EMA. When did we go below it? How far can we go back? How far do we have to go back? Oh my word. Touched it again back in 2015. Whoa, check this out. I'm going to have to tighten this thing up. See how far back there we go. It crossed over back in 2009. Whoa. Is that giving you any idea as to how complicated things have gotten with this track down? Whoa. So we might be in for a spell of some harshness from the market as we continue to watch things and move forward. But again, if you've got that level of sophistication where you understand how to short the market, how to buy puts, you understand inverse funds and the risks and the benefits associated with them, then of course you've got potential options. Need you to practice trade this stuff to learn what it's all about. You start throwing real money at a market this dangerous, and my friends, you are going to get screwed. Okay, that's where we are when it comes to stocks, comes to our 2 index funds that we track. Let's see where things are. Oh, and by the way, the Q's down for the day 4.65%. S&P 500 down 3.8%. We look at 20-year bonds down looks like 14%. So again, things are tough out there. As we look at bonds, what do we see happening? Well, we can see we're well below the 200 EMA on the half-day chart. We had a position that we tried to make a decent move on, and then of course it bounced up and triggered us out. We only made 0.5% on that trade there. That's okay. Then things moved up a second half day and then rolled over, ever increasing. Yes, we could have jumped in again when things went from green back to red, but the STC had already turned in our direction. And what have we learned from trying to do that? That you're much better off just taking that initial chunk of money and then letting it run whichever way it's going to run and wait for the STC to trigger your ability to get back in. What do we see on the 2-day? We see on the 2-day chart, again, we are well below the 200 EMA. Let me bring it down to show you. And again, we are just stair-stepping down, still green on the STC, waiting for it to go to red. Of course, on the weekly, we've been in the red for quite a while. And when we look at this weekly chart, you can see that even on the weekly in bonds, we are well below the 200 EMA. So we are in lots of bear territory there when it comes to bonds. And things are not tracking well in that index. We're going to leave bonds. We'll go back to the 195-minute chart. We'll go to gold. Gold down for the day, 2.6, it looks like 64%. And again, gold reached up and touched and then fell off, just died off the vine, rotating down. And of course, where were we? We had the opportunity to jump into gold as it was moving down. We look at where we are on the 2-day, touching that. We are still negative on the 2-day on gold on the STC and negative on the weekly. So again, we had the opportunity to jump into a down move on gold. Again, as you guys know, it's not something that we have an inverse fund for. DPZ is an inverse fund, but it is not liquid. Of course, puts are another option in gold. And let's not forget about Bitcoin. Oh, did you see what the Bitcoin index was down? This is the VanEck Bitcoin ETF. It's the future ETF. It is down 19%, almost 20% for the day. Oh, I would hate to be holding Bitcoin. I am not. I have bought this ETF before when things were going in the right direction. I would not want to be holding on to any of it now. How horrible. How horrible and nasty. Of course, our STC rotated over going down when? Back on the 10th. However, we, of course, have not been trusting this STC because of all the sideways slide that has made the STC extremely inaccurate. I guess it wasn't inaccurate here when it rotated over going down, but I would not have known that or expected that. I was not counting on the STC to be giving me much valuable information because it's not lately with where things have been because of that sideways slide. What about the 2-day? On Bitcoin, rocketing down, STC negative. What about the weekly? Of course, rocketing down, STC negative. Oh, things are just brutal in the Bitcoin world as we continue to watch it. It had, rocketed down until January and then tried to peak up a little bit down and then peaking up and then rotating over there in April and then just heading down, 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 sideways for the last couple of weeks and then boom, hammering, dropping off the deep end. Will Bitcoin recover? It has in the past. Even when it's been this bloody, of course, not these kinds of monetary size in losses sustained, but it has had hard times before. And you know what, friends? We'll wait, watch, and see if Bitcoin does turn around, which I expect something good will happen. When it does, we'll see it on the charts. And I'll be jumping in there. I'll be encouraging you to practice trade it. I may even be buying some like I've done in the past, but I'm not going to be one of these dummies that says I'm holding on to my Bitcoin forever. Who would do that? I don't understand that at all. If it's a fungible item that you can buy and sell, why would you just hold on to something that's losing this kind of value? But you know what? I don't understand all the things people do. I've wondered about people for years. Okay. That is the show as far as reviewing those charts for you. What I did want to show you, who are interested, and if you're not interested, you don't have to be, I can show you back in time over these last couple of months where we have jumped in. And just to verify with you, let me move that out of the way. You can see where we jumped in down 1.32, down 3.54%, something like that, 2.59%, sorry, on that first move. Then down an additional 4.20%. And then we had a kick up here where we actually lost 2.20%. That put us in the neighborhood of about a 7%. We added all that together and subtracted it. 7% gain on the S&P. And again, let's see, 2.59 plus 4.20 minus, and again, that's minus 2.22%. That comes out on the S&P, I'm sorry, it wasn't 7, it's 4.63%. That's a 4.63% gain on the S&P. And again, if you do each one of those, like I told you I like to do with my X trade, which is $100,000. Now you could have You could have, of course, diminished that amount based upon your ATR if you're using the ATR training that we teach. If you kept it at, of course, 100 per, then you had, for each of those trades, you could have added that percentage profit in there. Of course, we go to the Qs. What do you see on the Qs? We had 3 trades throughout the month. Let me scrunch this up a little bit so you can see those. We had the STC crossover going down right there at the very top of that middle portion that we otherwise stay away from, but it was right there on it. And we crossed over, we jumped in. That was a down trade for 3.54% capture. The next one that we had on the 5th of May was again another down move, 5.48%. And then we had a loss on this one where things started moving down and then bumped up. You can see we lost 1.67%. That overall was 7.35% on the Nasdaq 100 during the months of April and May. Then we go to the 20-year bonds, TLT. We had 3 trades there during the months of April and May. You see this trade here for 2.74%. We then had a trade where we ended up, let's see, losing 1.81% there. And then we had one more trade where we ended up gaining just a mere 0.43%. Things went down and then they popped back up, and we captured just a mere 0.43%. Overall, 20-year bonds 1.36% for that 2-month period. And then lastly, we go to gold. And what did gold do for us? Well, we had 3 trades in gold, and like all of these, and they varied a little bit, whether it was the first 2 were positive and the last was negative, or the first was positive, last was middle was negative, last was negative. Each of these, we had 3 trades in each of our 4 ETFs. In gold, we had our first trade on the 8th of April. Let me roll this back a little bit, tighten this up some. There we go. See if that's the... No, that is not the first one in gold. Here, let's see. 1.65%. There's the first one in gold. I think we had a gain of, let me see here. I want to make sure I capture the right ones. The 7th. Yep, that's 0.6. Oh, there it is. 0.60% was all we captured in that run up. It bumped up and then popped down on us. You can see it right there. So 0.60% is what we captured first. Then we lost 1.65%. And then lastly, we had a gold short that we gained 2.07%. And overall in gold, 1.02%. So as far as gold went, and as far as bonds went, not really a great 2 months. 1.36% we made on bonds, 1.02% we made on gold. But again, S&P decent at 4.63%. And of course, the big winner was the Nasdaq 100. Again, we only had 1, 2, 3 trades, but overall, we captured 7.35%. Like I said, for a total of 14.36%. Not bad for 2 months. Not bad at all. Now, of course, if you could do an average, and again, I'm just saying if you could do an average of 7% a month, of course, that is not a bad year that you would have, is it? Not a bad year at all if you could do that month in and month out. And I just want to challenge you to see how well you can do when you take these trades, when you set your profit and loss bands, and when you see how well you can do in these markets. And again, we're in the summertime trading zone. And what have we just seen happen with, again, I didn't even add in these latest successful trades in the S&P 500 and the Nasdaq 100, again, capturing an additional, and again, this is just the beginning of June now, capturing an additional 5% on the Nasdaq 100, and on the S&P, an additional 3.27%. Could have been a lot more if you'd set a trailing stop. And again, I've done that on my trade. I might pay for that. Why couldn't I just be happy? Why couldn't I just be happy with taking a nice, beautiful profit of 5.03%? Again, I'm just watching those markets crash, and maybe I'm being stupid. But the market has been very, very good to me. So I'm just saying, is 84% potentially a year if you could have just 7% a month? Is that okay? Doing what? 3 trades on each of these ETFs? I mean, that's over a 2-month period, okay? We're talking 12 trades altogether. 3 trades on 4 ETFs. That's, on average, 6 trades a month. Do you think you could do that and monitor that and make that work? Why not try it in your practice trades? I emphasize over and over, I'm not here giving you market advice, and nobody pays me for that. I don't charge you anything. We appreciate the Patreon members who support us, but again, I'm not here giving you advice. I'm just here encouraging you to practice trade this stuff and prove it to yourself. We just appreciate you. I'm so happy I can share this with you. You might say, Thom, what's the deal on this? Why do you do this? And I'm telling you, I'm the one who benefits more from this than any of you guys, because I get to teach it every day. I have to involve myself in it. I have to really think about what I'm trying to show you guys, and it makes me a better trader. I'm here to thank you for helping me become a better trader. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.